In this video, I'll show you how to spot false breakouts very easily using some simple data tools. The whole idea is looking at the morning opening range breakout. In this case, example inside of Meta, we had a short side breakout, but instead of playing the short side breakout, we're playing the long entry instead. Here's an example inside of Meta, and another example, is inside of Lowe's from yesterday. If you take a look, Lowe's, we had the long side breakout, but instead we're actually playing the short side entries. Now, what do both Lowe and Meta have in common? Let's start with Meta first. If we start with first the 30-minute opening range, and actually let's pull in our backtest metrics to bring in some data first. So I've loaded in the Meta 30-minute breakout, and I've simply run this backtest. Now take a look at the breakdown between longs versus shorts, and since we're looking at the short side breakout here, we'll focus on the shorts. Inside of the shorts, we're looking at 25 trades, but our win rate has been just about 40%. That tells us more times than not, whenever we do have this short side breakout, we actually see price reverse and hit our stop more often. We can infer that from this 40% win rate. 60% is actually on the flip side for the strategy. Now, this strategy also has a negative expectancy and a negative P&L, which tells us that really the short side breakouts inside of Meta have not been working all that well inside of the past 90 days. Now we have some data around Meta. We need to wait for the actual setup to trigger, and we had exactly that happen today. We had a 30-minute short side breakout, price chopped around. These support lines that you see are simply just the highs from the candle that we have here. I just took the wicks and drew them out as potential support zones and looked for an overlap of that alongside our volatility box zones. Now, with this, we also had the edge signal, which very clearly told us each time we dipped into this zone when we started to hit the oversold territory. The first entry is the one that I took, and in the second half of the day, you'll see after the lunchtime hour, we had the really nice latter half of the day, but this was really the second half on a Friday. Now, why does Meta stand out? Well, if we come into the daily time frame chart here, and now I'm going to remove all of these. Let's remove these price levels so we can see this a little clearer. Meta has been chopping around for quite some time, and if you take a look at the trend has now shifted to this market stage of accumulation. That tells us that we're now expecting this market pulse to slowly transition back to green if we were to see the buyers kick in. So we're front running that. So there, we're trading in the direction of the trend, given that we're looking for a long side entry with the market stage that's switching more to the bullish side. This candle, all of this, we've been in this market stage of accumulation. Now let's repeat the same exercise, but this time inside of Lowe's. Lowe's was a short side entry, and take a look first at the daily time frame. Very clear that Lowe's has been in this market stage of deceleration. Only a short blip where we tried to flip over, but mostly very bearish. If we repeat the same data-driven exercise here, I'm going to test Lowe's breakout 90 days. What we're going to focus on is the long entry since we had a short side trade. So we want to see how effective has the long side breakout been. Now, if you take a look here, the long side breakout has actually been quite successful, 68% win rate over the same 90 days. If you remember, inside of Meta, that win rate was closer to 40%. So right off the bat, we know that Lowe is a slightly stronger setup. We also have a positive expectancy and a positive P&L here. So why do we still go short? Well, if you come inside and we now take a look at our charts, take a look at just how many of these oversold signals we had screaming on the 5-minute time frame chart. The first entry was after the first batch of signals when we came close up to the entry and we played a move back to the market pulse. Chopped around, post the lunchtime hour, the bot took the second entry, 218.06, rode it all the way into the market close. Take a look at the continuation for those of you that do like to hold overnight, and you'll see that Lowe's plays this out quite nicely. Now, I do think Meta was the stronger setup between these two, and I also like the long side bias when the index markets are still very much pointed bullish and we're waiting for the markets to transition. So there you have it, a very quick and easy way on how to use the backtest To infer which setups you would like to trade bullish or bearish, use the market pulse as a trend confirmation tool, and then layer on the intraday signals like the edge signal or the momentum cross to figure out when you would like to enter. If you have any questions, feel free to send us an email, else we'll see you in the next update. Take care, everyone.